Hello everyone. Today we're going to talk about Bitcoin, which is trading at $121,650. Let me remind you that in the previous video we talked about the market being in a long position. There are no reasons to open short positions, but buying at all-time highs is also not the right move. So when should you buy? When we see a correction. And actually, to get ahead of ourselves a bit, it seems like we've already seen this correction. But we need to wait for this correction to be completed. For now, it's still developing, and that's what we'll be talking about today. Let's switch to the chart and see what's happening. Before that, I want to draw your attention to the fact that the stock market is also at all-time highs. The Dow Jones, S&P 500, and Nasdaq indices. And this also calls for caution when it comes to buying, because buying at all-time highs is not the right approach. You should wait for a correction, buy during the correction with a stop loss, but never at the very top. Yes, growth can be unlimited, it can last for an extremely long time, well, relatively infinite, but buying at the highs instead of during a correction is not the right approach. Now, let's move on to the chart. What do we have with Bitcoin? Here we have potential scenarios that I outlined back in the video before last. And it looks like everything is going according to plan. So what was our plan? When we were at the $121,000 mark, I said that we could either go down to around $117,000 or set a new all-time high, right? And look, we actually moved exactly in the direction I had drawn out, right? And after that, it's very likely we'll see a drop to around $119,000, potentially even to $117,000, or possibly even down here to the area of the 200-day moving average, which we were approaching but haven't tested yet. Now let's take a closer look at things. What are the key levels on the charts? Well, first of all, let's hold off on the levels for a moment. Let's remove all the markings. Look, the daily candle from the day before yesterday engulfed 2 days of growth at once, each of which had consecutively set new all-time highs. This is a bearish engulfing pattern, and this bearish engulfing will only be invalidated if we, in the opposite direction, engulf this red-orange candle with a bullish engulfing pattern. Accordingly, by formal criteria, we have a short here, meaning the correction I told you about has begun. The target of this correction, in the simplest terms, since this level, the highest close, has been broken, is likely the top of the range somewhere around here, in the area of $120,000. Now let's turn the markings back on and take a look at them. Look, here we have the highest close that existed before this. That close was at $123,306, and I emphasize 43 cents. Now let's look very carefully at where yesterday's green candle closed. Its closing price was $123,306.00. So, we fell short by 44 cents to break through this blue level in the opposite direction. This indicates that the level is strong, it's a quality level, and with high probability we will see a decline to the next support at 119,840. So our target area is right here. The RSI is also pointing downward. We can't say there are any divergences here, there aren't any. But technically, the market is now looking downward toward the area of $119,842 and potentially even $117,265. And possibly even toward the moving average, the 200-day moving average, which is around $106,500. That's all. Now, let's take a look. At this point, we could actually end the review. Now, let's look at the weekly candles. What do we have here? On the weekly candles, last week we had a candle that indicated that this week we would almost certainly update the high. And that's exactly what happened. And if this week closes with a drop, with a red candle, then it's very likely that we'll test the same range of $119,500. And if we go even lower, then the bottom of this range is right here, $117,000. So we need to watch how the weekly candle closes, but there are some very strong hints here of a decline, at least to the area of 120,000. Monthly candles. On the monthly candles, again, it's too early to say for sure, but it looks like we have a long position. So the monthly candles, at least in their current configuration with about 20 days left until the October candle closes, are indicating a continuation of growth. And for right now, until the October monthly candle officially closes, we can safely assume that we might potentially see a significant correction in Bitcoin's price and then a clear continuation of its growth to achieve new all-time highs. Maybe it will be $130,000 or $150,000, but we don't see the correction ending yet. We see it developing dynamically with target levels at $120,000, $119,000, and $117,000. That's it. With that, I suggest we wrap up the review, but I have a small note for those who made it to the end. I wrote in the Telegram channel that I want to make the releases not at random times, but to have them systematized and released on specific days and at specific times. Roughly speaking, for example, from 9 to 10 in the morning or from 10 to 11 in the evening. So that these would be regular reviews weekly, maybe several times a week about Bitcoin, so that there would be reviews, for example, on the Forex market, maybe once a week, maybe on gold, maybe on altcoins. Accordingly, please write any of your suggestions regarding the timing, frequency, or days of release in the comments to this video. If you write them, you'll be doing yourself a favor, because in that case, I'll read them and try to take your suggestions into account. And then once the video release schedule is set, because I really want to make this a regular thing, you won't have to wonder when Vasha will release a new analytical review. Instead, you'll know exactly which day and time it comes out, and you can look forward to it. If you don't write anything, then accordingly I'll either do nothing or do it in a way that might not be very convenient for you. So I'm looking forward to your comments. On that note, I suggest we wrap up this review. See you next time. Subscribe, give a like or a dislike, and of course leave your comments. Goodbye.